everyone, it's Fiona from Nadaya Financial and it's Mortgage Monday. Hope you've all had a fabulous weekend and happy Mardi Gras to those of you out there as well. Today I'm going to discuss interest-only loans and just a little bit of information around interest-only loans. First of all, why would I use an interest-only loan? When would I need one? Well, they're actually ideal for investors because the main objective for a lot of investors are to purchase a property and to pay as the bare minimum necessary to keep the property, however, for the property to appreciate over time. So their main objective is to buy the property, is to pay a minimum, and as years go by, the value of the property appreciates and then they can sell it and make money that way. Now, the difference between principal and interest and an interest-only loan, well, first of all, a principal and interest loan is mainly for an owner-occupier, someone living in their own home who wants to pay down their debt because you're paying down the principal amount as well as the interest. So at the end of 30 years, hopefully your mortgage will be zero or even earlier if you can manage that. So an interest-only loan, as I said, will only pay off the interest required each month that's been accrued. Now, what happens towards the end of an interest-only loan? Okay, so the main loan term for an interest-only loan is 5 years. And what happens, within that first 5 years, you're only paying interest on that property. When it comes to expire, it comes into the 25th year, you'll find a lot of investors are looking to refinance to find another bank because they want to continue paying interest only. Because what happens is when that interest-only loan term expires, it reverts to principal and interest. So not only are you paying principal and interest repayments now, you're also paying the principal amount that you haven't paid for the first 5 years. It gets added on. So you are going to be slugged with a massive repayment compared to what you've currently been paying, from interest only to principal and interest. And that's why a lot of people refinance at the end of their 5-year loan term. There are a couple of banks out there that you may be able to renegotiate interest-only loan terms, but you may need to, submit all your paperwork and get reassessed all over again. Also, if you have a fixed-rate loan, say 3-year fixed-rate interest-only loan, a lot of the time the interest-only loan term equates to the term of the fixed rate. So you can only fix it if you're fixing it for 3 years, your interest-only loan term will also be 3 years. And one more thing, with interest-only loans, did you know, because sometimes I have clients that purchase an investment property and they would like to knock down the debt, which is great. And if you do, did you know that you can still have an interest-only loan term, but you can pay extra? So say, for example, your repayment was $250 a week and you paid $300 a week towards your interest-only loan, then that extra $50 actually goes directly towards the principal amount. So you can pay extra towards that loan if you like. If it isn't a fixed rate loan term, I would check with your broker to see how much extra you can pay towards that fixed rate loan without receiving a fee in doing so. So that's it from me on interest only loans today. So just remember, they're mainly 5 years. When it comes up to expiry, you may want to look into speaking to your broker to find another bank to do a refinance so that you don't go to the principal and only repayments, because as I've explained, they can be quite a jump. So that's it from me today. If you'd like any further information on what I've discussed, feel free to leave a message below and have a great day.